Welcome to Lickin' on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lickin, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lickin' on Lending. Now your host, David Lickin.
Listeners, it's time for another AI update, and we have joining us again, Pavan Agarwal. Pavan, good to have you back.
It's good to be here. What an exciting time we're at.
Oh my gosh, and look what's happening in the world of AI. There's all these reports coming out, which I want to dive into. I sent you a video the other day about an analysis about OpenAI, the stock, the valuation of it. And you came out with some great perspective, and I was thinking, is this time to be shorting that stock and play that side of the market, the short end of the market there? You had some really good market, and I know everyone's looking at valuations. You had an amazing valuation, came in $119 billion, came in on Intelligence for the Angel AI product. So you understand valuations. You hired one of the top firms. What's going on in the world of OpenAI, this LLM, large language models, when it comes to valuations? There seems to be some shifting and going on there. Please share your thoughts.
At this point, what is not going on in the world? It's almost like you don't even know what's going to happen next. This is very interesting times.
Yes.
And I think the thing that I'm watching the most closely is the dollar-yen trade. And
it's so interesting I'm going to interject because it's so interesting you bring that up. When we're recording this on Tuesday, December 2nd. We'll get this released this week. But what happened is Japan was the reason the bonds deteriorated, the 10-year deteriorated. They blamed it on that. So it's interesting that you're bringing up the Japanese yen because of their recent decision. Their central bank recently increased their 10-year treasury or 10-year note. And that kind of gave the market a reason to go up. Now, there's a lot to that. So let's go ahead and jump over there. Wanted to talk about valuations in a minute.
It's all related. It's all interconnected.
That's interesting.
The dollar-yen trade is tied to Bitcoin and is tied to AI and tech stocks. This is such an interconnected world, right? And we have like policymakers and politicians do something and they have no idea, like the ripple effect that they send through the whole system, right? So there's nobody smart enough to figure this stuff out, and they just do stuff.
And not knowing the cause and effect of what they're doing.
Not knowing the consequences, and we all know that none of our leaders on either side of the aisle are that smart.
Yeah, no, that's true. So you were starting to talk about the yen against the dollar.
Yeah, the new prime minister has been raising the rates. I actually agree with her because Japan's been doing basically for 30 years, they keep a definition of sanity doing the same thing over and over again, expecting different results. 30 years, they kept the interest rates artificially low. They kept their yen high, right? And interest rates low. So what's been happening is basically wealth from Japan has been going to higher interest rates markets, which is the U.S. So a lot of money from Japan has moved into the U.S. and has been driving up U.S. equities and so forth.
That makes sense. And then think about that for a minute, listeners. You have the ability in Japan to borrow money at zero interest. That's where it's very close to. Now it just jumped up to 1.61. So it's still way below the 10-year treasury. But that's now taking away some of the advantage for people to go in and borrow yen on the dollar. The yen currency,
borrow yen, and
then go and invest
it in dollars
in the U.S. market, and the spread right there. You could just buy treasuries and be making a nice spread. So she's fixing that. That's what you're referencing.
That's what she's fixing, because that's what they've since the currency crash in the late 80s, and basically they had the last decade of Japan has become the last 3 decades of Japan. And they've kept this policy forever. They've got to change something. I agree 100%. Something's got to change, right? So the whole idea of the central bank was, let's drop interest rates to zero so that we can spur economic activity. But instead of doing that, okay, people with money they said, hey, it's a lot easier. Why would I take risks and invest it locally when I could just go ahead and buy U.S. equities and U.S. bonds and make a lot more money that way and not have to work as hard? So clearly that's not working. So all that did was impoverish the country. It essentially left the country to the U.S. and other places around the world. And so that means if this isn't working, and essentially the government is subsidizing that by artificially low interest rates. Basically, the government's losing money.
Yeah.
The Japanese central bank is losing money by by lending out yen for nothing. And so that was basically this dollar yen trade is what they call it. And it was a risk on trade, right? If I could borrow money at zero, then I'm incentivized to put it in riskier assets, okay, like Bitcoin, like AI shares and things like that, because then I could say, hey, you know what, I could bet some over here and I'm not paying any coupon, right? I'm borrowing it at zero and I can get 500% returns or maybe 5,000% returns. And it's like that made so much sense. If borrowing money gets more expensive in Japan, then I can't put it into Bitcoin, okay, because I need cash to pay the coupon. If I could borrow at zero, I don't need any cash. But now I can't put it in Bitcoin because Bitcoin doesn't pay me any current coupon.
That's right. It's not a bond. It's not paying out dividends yet.
Yes, exactly. So the Japanese have been selling off Bitcoin. So that's what's causing the Bitcoin to fall. And they've also been selling off their, like you saw, SoftBank unwound their position on NVIDIA.
Exactly right. That was significant.
Right? Yeah, completely unwound the position on NVIDIA. And so there's a lot of Japanese money that has been moved into the AI world also. So because it's, okay, I could borrow money at zero and put it in AI private equity. And yeah, I know it's I got to wait. If I'm the investor, I'm thinking, yeah, I know I got to wait until these things go public before I get a pop, but I'm not paying any interest anyways. So let's let it sit there. And just let it sit there, watch the equity value of these things grow and rise, and then as they rise and then they liquidate, then I'll get my returns. But because there's no cost to carry, when you borrow money at zero, there's no cost to carry, so you can do trades where you can just buy and hold, okay, because there's no negative carry on those trades. Okay, but now that there's a negative carry, all of those trades are unwinding. Okay, and that's pulling money out of anything that's a long hold before there's a return. So we're seeing that effect already is affecting the Bitcoin market in a big way, and we're seeing it also affecting the AI markets. With SoftBank selling some of their positions, that's an early indicator that this stuff is happening.
Yeah, which goes to the whole, but in the long-term picture, still Bitcoin is still a great investment. This has just created a buy opportunity.
This has created a buy opportunity, and there's other things happening with Bitcoin because yesterday Peter Schiff, he put out
a that article. Yeah,
he put out a very funny post. He lives down the street from me here in Puerto Rico, and he's been right about being long gold. He's been talking about it. You got to go long gold for a long time, and he's been right. I'm looking at gold is, I don't know what's the latest, $4,000 or $5,000 an ounce or something like that. It's something crazy, right? So yeah, I got to hand it to him. He was 100% right, and he saw the train wreck coming. And he's also been saying, hey, Bitcoin is way too high. That's been his position. I don't agree with him on the long run. Okay, full disclosure, I think Bitcoin in the long run is still heading towards astronomical heights. I think this is a short-term trading technical or short-term market correction, but long run, I think this is going to go really well for Bitcoin. So a lot of drove up Bitcoin was MicroStrategy's buying up the market, and then yesterday MicroStrategy's basically is like saying they're having to, instead of buying Bitcoin, they're putting cash out to attract, they're paying a 10% preferred return to get money to come in so they can meet their margins.
Because there's a lot of margins calls that are happening, and people are having to sell other things, or selling Bitcoin to get to the point where...
Exactly. And MicroStrategies can't sell Bitcoin. That would be converse or in conflict to their business plan. Right. So instead, they're paying a high preferred return to get cash in the door to then turn around and meet their margins because they bought a lot of the Bitcoin they bought is on leverage. So if Bitcoin falls, I forget the magic number. If it falls to 75,000, then MicroStrategy gets into really big trouble.
Yeah.
And I think the hedge funds are out there. They can look at this, just like how the hedge funds showed Lehman Brothers out of existence. And I think they're looking at the play on, hey, MicroStrategy is on the verge here. We have Bitcoin is falling, right? We have all the stars are aligned in the world just right with the dollar yen trade and a couple other things happening. They're like, hey, maybe if we press it, we can cause Bitcoin to drop, pop MicroStrategies, and pick up all these gains, right? So the shorts are now out and creating this feedback.
Yeah. It's really interesting. So how is this affecting the OpenAIs of the world? Tie it together.
I wouldn't want to be OpenAI.
I
right
know.
now.
I would. Yeah, exactly. This article, and I'll go. By the way, listeners, I'll put a link to the video that I watched, the YouTube video I watched that really brought this conversation about today, because there's some major corrections happening.
Yeah. I think that the biggest challenge I see with the OpenAI plan is so much of the money is spent on building these mega, what they call hyperscalers, these mega data centers.
Yep.
And those data centers are buying NVIDIA chips for $50,000 NVIDIA chips that are probably worth really $2,000.
Wow.
Okay. And so all that money is effectively going back to NVIDIA, and that's causing this loop of
Looping, that's what he brought out in the video.
Looping valuations.
And then looping up into
looping
unrealistic.
up.
Yep.
And now, so 2 weeks ago, SoftBank sold their NVIDIA position, right? And 2 days ago, Google announced basically their AI architecture, the AI data centers are NVIDIA free with their own Google TPUs, right? Tensor processing units, right? Which do the same thing, specialized software, obviously, to run the TPUs, but they've built the whole ecosystem around it. They do the same thing at a fraction of the cost, right? So then it starts to question, wait a minute, all this money, which, by the way, I think close to $1 trillion has been invested in building these mega data centers powered by NVIDIA chips. And a lot of those data centers, by the way, are levered up by various major banks. Okay.
So the failure, as this starts
to unwind, there could be a major contagion. Right. Now, if you're saying these chips are $2,000 selling for $50,000, that's 25x overvalued. And Google just demonstrated, hey, I'm doing it better and cheaper.
And yes.
Because Google has been just taking a slow, steady approach, and there's a company with $100 billion of cash, so they don't really care about the noise, and they're just moving forward and building a better AI solution. Okay, and so you got Google doing this. You have AMD coming out with their chipset that competes with and a open architecture. So
that is that's a big key.
So Google released an open architecture, AMD released an open architecture, and then there's the open source community, Apache, and a few others that have come up with completely open architectures for GPUs. And whereas what's been keeping everyone hooked on to NVIDIA is NVIDIA's software stack, which they call CUDA, C-U-D-A, and that's keeping everyone, which is a very good ecosystem.
Right.
But it's a closed.
When you have a limited commodity controlled by one person, they start setting the prices. That's why you get 25x of the value of the chip.
Exactly. And these days, look, you can create, like if you're Apple with the iPhone, that's a closed architecture. Okay, and they succeeded at keeping that closed because it's sold to consumers. The consumers are not going to care about getting inside and reprogramming and rewiring it, right?
Yep.
And it closes better when
it works, and that's why we both own one. Yep.
I'm an Android guy.
Oh, that's right. You're an Android guy. That's all right. I mean, I'm an Apple guy. I'm in the Apple system.
Right. So,
of course.
So if you have a closed architecture, that'll work if you're working with consumers don't want options. Okay. But in data center world, that's being run by engineers. And if you think about how screwed up the market is, it's like you got one NVIDIA, one chip company, and you got maybe 6 hyperscalers out there, right? You got OpenAI, Microsoft.
Real quick.
Hyperscaler is a fancy word of saying mega data centers.
Okay.
Mega AI data centers. You got XAI, Microsoft, Meta, OpenAI, Amazon, right?
Yep.
Maybe one more. So you got basically 6 big mega tech companies buying up NVIDIA chips, right? And they're run by the smartest engineers in the world, right? And so you don't think they can figure out how to switch chips, right? If somebody comes up with a chip that's 1/10 the cost, you don't think they'll switch it out
that fast? Yeah.
Yeah, they'll throw a team of engineers at it and say rewrite the code. If they have to, they'll rewrite every line of code and they'll switch it out.
And now with AI, you can rewrite the code so fast.
Exactly. So
it's not a huge mountain to climb.
Yeah, and anyways, all these open standards, like the AMD's open standard that they created, it's all backward compatible with the NVIDIA's CUDA. So there's the whole NVIDIA ecosystem. And I think NVIDIA thought they were Intel, where they can just own the whole AI space, right? Again, it worked for Intel because they were partnered with Microsoft and they had this, and it was targeting consumers, right? Consumers cannot go in and recompile and rebuild all that software onto alternate chip systems, right? Although it took what, 40 years. It's happened now. Everything's switched off. So Intel's in big trouble, but that's a different story. But
Another story, another podcast.
yeah, there's another podcast, right? But for NVIDIA, which is working with only 6 other companies, really, if you think about it, 6 other mega companies, and they can switch on a dime. So there's no moat. You know, what we call in the tech industry a moat. NVIDIA has no moat. They had some moat. They had a first mover advantage. They had a great ecosystem, and everyone plugged into it, right? But some people who plugged into it can easily plug out of it. Right. NVIDIA is not selling to you and me.
Yeah.
They're not selling to
Mr. and Mrs. Smith
on Main Street. Yeah. So that's the problem. So I wouldn't want to be long NVIDIA stock right now. I wouldn't want to be long on an OpenAI investment because most of that investment in OpenAI hasn't really gone into creating. The OpenAI tech is awesome tech, but is it any better than Google's Gemini or Anthropic's Claude or Meta stuff? No, it's all about the same, right?
Yeah.
And in fact, the latest version of Gemini, there's an internal memo that just leaked from OpenAI that basically says how much better Google's Gemini is than OpenAI. And all that money that's been spent on OpenAI has been spent on OpenAI making these big, huge mega data centers. It's just hardware, right? If you just break things down to fundamentals, yep. How often, like, we all have laptops and whatever, right? And even your iPhone, in 2 years you throw it away, you get a new one.
I know.
Right? Like, why would you spend so much money on hardware? Because it's going to go obsolete. Right? Yes. You can amortize it over 3 years, 6 years, play whatever games you want. It's not something that's going to last. An investment is something that will last you a long time. Like, good money management is if you go to the mall, almost anything you go to the mall and you buy. If you don't own it, if you will not be owning it after the next 3 to 5 years, that's an expense. It's not an investment.
This is just so fascinating. And what I wanted to do is keep these updates as tight as we can. You've given us a great amount of information. Sum it up. What should we be looking for as the listeners are listening to you on this? You're truly an expert on this subject matter expert on all of this. What is your recommendation as we wrap this up?
This is what I think is going to happen with OpenAI. Unless, like, we had a sudden shock to the system with the dollar yen trade. And we also have this whole thing happening around MicroStrategies and Bitcoin. Right? Yes. And the other problem here is that a lot of Bitcoin, as Bitcoin has shot up past $120,000, a lot of Bitcoin holders had levered up their Bitcoin, right? Yes. And said, oh, I could really increase my returns. Let me borrow money against my Bitcoin and invest it in AI stock. So a lot of the money feeding the AI stock, AI ecosystem was Bitcoin money. So the two are interconnected.
Yeah, so they're getting margin called, though, is the bottom line.
So the Bitcoin guys are liquidating. So the money flow from the Bitcoin to AI has stopped. Anything may be getting pulled out. And on the other side, the dollar yen trade is happening. So high risk, long-term high risk investments has slowed down there. So they get 2 strikes have been hit against the AI world, right? Which it's not, these aren't by far fatal. These are just, they create some noise, they create some adjustments. Right. If it just stays at this and nothing major happens after this point, okay, so I think we're going to be, I think the OpenAI IPO is going to do great, right? I think everything will be just fine. And at the long run, we'll look back and look at these corrections as, hey, this was healthy. It corrected the markets to where it should be. But if one more blow hits this market from some other direction, and who knows what, right? It could be anything. It could be another war. It could be something crazy happening with oil prices. Yeah. Nobody knows what could happen, right? So if one more blow hits the market and disrupts this capital flow, okay, then we could see a systemic collapse of these AI companies, and then the contagion effect, because those data centers are heavily levered. So these
in the banks,
in the banks, and either banks or REITs, because they're data centers, they're real estate in effect, so they could go into REITs. Right. So you got these heavily levered banks and other major systemic institutions that you could have kind of a 2008 contagion effect, and could cause this cascading bank failures and major fund failures. And if that happens, it would be basically the Fed will have to bail out again. Yeah. And OpenAI, I think the CTO of OpenAI, the CFO of OpenAI, actually suggested that we're too big to fail. She didn't say exactly. She didn't say that exactly, but she implied that, hey, you know what, the Fed is going to need to step in. May need to step in.
It's crazy stuff.
Right. I guess when the old saying is, if you owe the bank $5 million, the bank owns you, right? But if you owe the bank $5 billion, you own the bank. And OpenAI and a few of these companies have put themselves in that position where they own the bank.
Amazing. Fascinating. I want to get more into that in the next episode. Thank you so much, Pavan, for coming in and sharing some of the latest activities, what's going on. What's some Angel AI updates? I keep seeing all these wonderful testimonies real quickly that they just keep coming out, how the people are discovering the power of Angel AI and how it is working and transforming so many businesses.
We'll close off with something really fun. Our newest Angel AI athlete, Kelly.
Yes.
She is, if you ever seen the movie Cool Runnings, which is the Jamaican bobsled team going to the Olympics, right? So she is the only Winter Olympian from Puerto Rico.
Love it.
And it's not a bobsled, it's that single sled.
It's a single sled, yeah.
It's a single sled where she goes down really fast.
Yeah.
She hit over 100 miles an hour at the bottom. So she just won the gold in the North American Cup. I think just happened 2 days ago. It was so cool. She went up, took her gold medal wearing an Angel AI jacket. It was
I love it.
Amazing.
Well, I love the fact that you sponsor so many athletes, young athletes that are up and comers that are absolutely winning at the game and their craft. And so that's exactly what you're doing. Pavan, thanks so much for being here again. Congratulations, kudos to you. And looking forward to spending some time with you at the Christmas party.
Thank you, David. See you there.
Appreciate you. Thanks so much for taking time to watch this video. If you liked it and the information here, let us know. Appreciate hearing from you. Hope you have a great rest of your week and happy holidays.
You've been listening to Lickin' on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lickin' on Lending.